most companies have released their Q2 results for the current fiscal year. Now, while the banking industry continued to thrive, higher commodity prices and rising interest rates hurt the rest of India corporate sector's capacity to generate strong profit margins. Now, let's understand to what extent these headwinds have taken a toll on the Nifty 50 company results. The Nifty 50 has a well-diversified portfolio across sectors with 78% exposure to the top 5 sectors, which are financial services, IT, oil and gas, FMCG and auto. In Q2, Nifty companies saw their sales rise 29% year over year, while profit for Nifty rose 9% year over year, fueled by the banking and financial services sector. However, when we take out profits of the banking and financial sector, the earnings fell 3% year over year compared with the 19% year over year growth in the previous quarter. Now, at a time when non-financial companies have seen their profits squeezed by higher interest rates and commodity prices, the financial services segment has experienced a boom in earnings. Now, growth momentum in the banking sector has remained strong over Q2, propelled by healthy loan growth, margin expansion, and continued improvement in asset quality. Now, commodity prices, including metal and energy, have been a drag on the earnings. But even with the commodity prices easing, it still remains high and could remain a headwind in the near future. Overall, the boom in financial sector profits in Q2 has negated the impact of rising commodities and interest costs for the overall Nifty 50 earnings. Demand for copper has long been a reliable sign of strong economic health for any country. Copper's main consumers include the real estate sector, home appliance makers, and clean energy transition industries. Now, given its widespread use, copper demand increases as factories grow, more homes are constructed, and more vehicles are manufactured. Now, if you're wondering why we're talking about copper, it is because India is said to be one of the fastest growing copper markets in the world. According to data from the World Bureau of Metal Statistics, India's consumption of refined copper increased by 45% between January and August of this year to about 435,466 tons, outpacing global growth of 4% and China's growth of 5% during the same period. Now, according to the Federation of Indian Mineral Industries, India's primary copper refining capacity is expected to increase from its current level of about 1 million tons in a year to about 1.6 million tons in the near future. Increased demand for copper typically indicates a growing economy, just as a drop in copper demand can suggest an economic slowdown. Now, the current uptick in copper demand shows India is regaining pace of its economic growth post-COVID amid global headwinds. A growing domestic end-use market fueled by urbanization, industrialization, and a series of government policies has contributed and will continue to contribute to India's strong copper demand. Going forward, the energy transition will also drive the demand for metals. The transition to e-mobility and a strong pipeline of renewable energy infrastructure projects will contribute to the continued robust domestic growth trajectory. So what does these news mean for you? Despite several challenges, corporate earnings for Q2 fiscal year 23 were better than expected, with the financial services and the banking sector driving the quarter. This will have an indirect positive impact on you. The strong uptick in copper demand is on the back of an economic revival underway in the country. This will have an indirect positive impact on you. While I say this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.